Accounting. The mere mention of the word is enough to send most small business owners into a state of panic or, worse yet, a coma. But, as the Oracle of Omaha, Warren Buffett, once said, accounting is the language of business. And if you can't speak the language, you might as well be trying to run your chippy using interpretive dance. Now, I know what you're thinking, but Keith, I didn't start my business to become an accountant. I started it because I have a passion for selling fashionable beard oils to hipsters in Shoreditch. Well, congratulations on finding your niche in the vast ocean of questionable life choices. However, unless you fancy your business going the way of the dodo, you might want to pay attention to the riveting world of debits and credits. You see, 9 out of 10 small businesses that fail to do so due to financial mismanagement. It's almost as if running a successful business requires more than just a clever name and a quirky logo. Shocking, I know. So, what exactly is accounting? Well, it's not just a way to torture business students or keep us accountants employed. It's the process of recording, reporting, interpreting and analysing financial information. So essentially, it's like keeping a diary of business's life, except instead of angsty poetry and crushed confessions, it's full of numbers that actually matter. So let's break it down, shall we? So first, we have recording transactions. So this is where you meticulously document every pound that comes in and goes out of your business. So it's like tracking your Nando's loyalty points, but with actual monetary value. So there are 5 main types of transactions you need to worry about. Revenue, expenses, assets, liabilities and equity. Revenue is what you earn from selling your products or services. It's the money you make that makes you do a little happy dance every time it hits your account. Expenses, on the other hand, are what make you weep silently into your Tesco value gin at night. So these are the costs incurred to run your business, like paying your staff or buying supplies. So assets are things your business owns that have value, like equipment or that fancy espresso machine you convinced yourself was a necessary business expense. Liabilities are what your business owes, like loans or that invoice from the graphic designer you've been meaning to pay. Finally, equity is the difference between what you own and what you owe. So it's like your business's net worth, but without the inflated sense of self-importance. Now, if you're anything like the average small business owner, you're probably recording all of this vital information on a collection of napkins, post-it notes and the back of your hand. Congratulations, you've mastered the art of chaotic bookkeeping. However, if you'd like a business to survive longer than an England manager's career, you might want to consider a more robust system. So this is where proper bookkeeping comes in. It's like Marie Kondo for your finances, except instead of asking if things spark joy, you're asking if they're tax deductible. By categorising each transaction correctly, you're laying the groundwork for the next exciting step in our accounting adventure: reporting. Step 3. Complete the script. Now, onto the thrilling world of financial reports. If recording transactions is like writing in a diary, then financial reports are like publishing your memoir. Except, instead of scandalous revelations, it's full of numbers that determine whether you'll be dining on caviar or beans on toast. There are 3 main reports you need to be familiar with: the income statement, the balance sheet and the cash flow statement. So let's start with the income statement, shall we? This little beauty shows your revenues, expenses and profit. It's like a report card for your business, except instead of grades, it shows whether you're in the black or drowning in a sea of red ink. The balance sheet, on the other hand, is like a snapshot of your business's financial health at a specific moment in time. It shows what you own, your assets, what you owe, liabilities, and what's left over, equity. It's particularly useful to determining if you can afford the new company car, or if you should stick to the trusty old Vauxhall Corsa for another year. Finally, we have the cash flow statement, which details all the cash sloshing in and out of your business. It's particularly useful to determining if you can actually pay your bills, or if you'll be resorting to raiding the office swear jar to make ends meet. Now, I know what you're thinking. Keith, this all sounds absolutely riveting, but what am I supposed to do with all these numbers? Well, my dear entrepreneur, this is where the real fun begins: interpreting and analysing your financial information. You see, These reports are about as useful as a chocolate teapot unless you know how to read them. It's like being handed the complete works of Shakespeare in the original Klingon, impressive but utterly incomprehensible without the right knowledge. So there are various ways to slice and dice your financial information to derive useful insights. For example, you can calculate your profit margin by dividing your net profit by sales. This tells you how much of each pound you get to keep after all the expenses are paid. If it's particularly low, you might want to consider raising your prices or finding a way to cut costs. Perhaps that office ping-pong table wasn't such a necessary expense after all. You can also calculate your return on advertising spend by dividing your advertising expenses by your sales revenue. This tells you whether your marketing efforts are paying off or if you're essentially setting piles of money on fire for warmth. On your balance sheet, you can calculate your current ratio by dividing your current assets by your current liabilities. This gives you an idea of how liquid your company is. In other words, whether you can pay your short-term debts or if you'll be resorting to selling your kidney on the black market. Of course, there are hundreds of other ways to analyse your financial statements. In fact, accountants spend years studying this stuff, which either speaks to the complexity of the subject or our questionable life choices. Either way, if you find yourself struggling to make sense of it all, don't be afraid to consult a professional. After all, that's what we're here for. Well, that and making spreadsheet jokes at parties. So in conclusion, accounting might not be the most exciting aspect of running a business, but it's certainly one of the most important. It's the difference between making informed decisions about your company's future and essentially playing pin the tail on the donkey with your business strategy. Remember, proper accounting starts with diligent record keeping. Every transaction, no matter how small, should be recorded and categorised correctly. It's like building a house. If your foundation is shaky, the whole thing is liable to come crashing down faster than you can say HMRC audit. So whether you're selling handcrafted doilies on Etsy or running a chain of fish and chip shops, take the time to get your accounting in order. Your future self and your bank account will thank you. And another thing I haven't mentioned yet is it's very important to do a proper cut-off each month. So you're on an accruals basis, not a cash basis, which means you're matching your sales against your cost of sales in the same period to which they relate to each other. Not when the other way of doing it is just if you happen to get paid in April, but the actual costs incurred go out in March, then your bank account and your profit and loss account will go like that, which is meaningless. You don't know if you're making a profit or loss that way. You need to do a proper cut-off and do it on an accruals basis. I can obviously help set that up for you. And also, all of the above, rather than have lots of numbers everywhere, it really helps to have graphs, pie charts, budgets, compare actuals against last year, ratio analysis, key performance indicators, etc. I can set that up for you as well. So, and this really brings the wisdom to life and means that you can avoid or reduce your risk and grow faster, more profitably. Anyway, to explore how I could possibly help you, why not get in touch with me? You can do that by just going to my website, redboxfinancial.com, and just start chatting to me in the chat box there. It comes directly to me. That's all for now. Bye.